I'm going to start with an easy question,
Okay.
just to warm up. Are we reaching sustainable finance fatigue? And how do you do real impact this, instead of just box ticking? Could you start, Thomas, please?
Yeah, sure. I think there definitely has been a bit of shine kind of get taken off the ESG just as inflation and global trade has kind of hit some headwinds. But we are still seeing a lot of demand for our green bonds, and we're also getting more questions about ESG as well, just from normal investors in our kind of vanilla fixed rate bonds as well. So it's still top of mind for both our customers and our investors. And I think like within Canada, we had Bill C-59 recently, which kind of helped address some of that greenwashing side of things to really make sure that like when people are saying stuff in public that there's science to back it up and a concrete plan in terms of moving forward for net emission reductions.
Are the kind of questions you getting the same, the ones that you were getting before, or have these questions changed recently?
Yeah, they definitely have changed a little bit. So before there used to be a lot of focus on what our use of proceeds are, what we have actually allocated to our green bonds as well. And now we're starting to get more questions about what is EDC doing as a whole for all of our lending. So one thing we do at EDC is we do have an ESG review of any lending we do, not just ones that are going to focus on being part of a green bond or sustainable bond.
Okay, what about you, André?
Yes, thank you. On the Inter-American Development Bank, we issue in sustainable development bond format, and we also issue bonds that are not labeled. The proceeds for both types of bonds finance essentially the same projects, which is the projects of IAGB, which are all sustainable. And because of that, some years ago, when we had a conversation with Bloomberg analysts, and Bloomberg is now tagging all the bonds, the sustainable development bonds, and the non-theme bonds with the sustainability tag. And the reason is because the proceeds of our bonds finance the projects of the bank. They do not finance operating expenses and other things that are financed with the bank's lending spread. So on that sense, we also have a new product that we launched recently, but we haven't yet launched any bond out of this framework, which is the Sustainable Debt Framework. And that framework will allow us to issue green and social bonds. And we haven't started yet, and that's a very specific framework that has a very clear use of proceeds. The Sustainable Development Bonds is generic use of proceeds, but the Sustainable Debt Framework has a very specific use of proceeds language.
And when should we expect to see the first bond coming out of this framework, and where?
Yes, we completed the 2025 program already, so our program goes from January to December, and we even did already some pre-funding. I would say 2026.
Which geography should be the first one, do you think? Which geography, which country?
That's open for discussion, so we have a few options. So we lend to 26 borrowing member countries, which are the countries in Latin America and in the Caribbean. We do have also one potential initiative, which is the Amazonia Forever initiative, which basically looks into projects for the Amazonia region and takes into consideration the specific needs from the peoples that live in that area. We are talking about 8 countries that are members of the bank. And on that umbrella, holistic umbrella, we could also issue Amazonia bonds, which is another framework that was launched recently together with the World Bank. And the idea is to provide guidance for countries to issue bonds associated with projects in that region. That said, the IAGB can also issue Amazonia bonds as a means to catalyst or to also initiate the funding for this particular product as well. And the Amazonia bond will be done under the Sustainable Debt Framework.
Okay.
Again, a project for likely 2026, given that we have already completed the 2025 program.
Okay. What about you, Samir? Do you think we've reached fatigue?
Well, the short answer is no. I don't think we reached that, but I think we need to be very cautious here because there has been a trend on focusing on the numbers rather than the quality of work done by the investment community. And IFC as an institution has been working so hard to develop its green and social bond principles and to also embed the ESG in its fund structures and term sheets when it comes to the individual project level. We have a sustainability framework, and we have also access to information policies that organizes how we should disclose our ESG data, especially that we are working with private sector and we are binded by NDAs most of the time. And also we have our performance standards, and those are 8 performance standards that we require our clients to use to assess and manage ESG risks. And those are very comprehensive standards. We are talking about environmental and social separately. We're talking about general health. We are talking about acquisition of land and indigenous people and cultural preservation. So it is very comprehensive, and that's why we are considering this on a project level, not just on a holistic level.
Okay. And where do you see the biggest gaps in mobilizing private capital, Samir, like today's, and I'm talking geography, sectors, and regulators?
Yeah, sure. So sector-wise, we are seeing the biggest gap in infrastructure. And especially those related to digital infrastructure when it comes to payment solutions, which is very important for financial inclusion in developing markets. The second one is access to clean water, or clean water projects, and clean energy. And also a big gap we are finding is in MSMEs. And actually that's reflected in our portfolio exposure, where the second biggest exposure for us is in infrastructure and the first exposure in financial institutions. And the way it works for us is that we rely on financial institutions, in local financial institutions, to lend to MSMEs to further support them because they have better knowledge of the markets. I mean, IFC has a presence in 135 countries, and we rely on our country offices to locate investment opportunities. But at the same time, we believe that financial institutions are the ones who really have knowledge of all of the details of the local markets. In terms of geography, I would say the poorer countries usually has bigger gaps, and this is because of the perceived higher risk included by investors. But I think the most difficult one to tackle is actually the regulatory uncertainty, because regulatory uncertainty is very idiosyncratic to each country, depending on the geopolitical environment of each country. And on the other hand, investor wants enforceable contracts. They want predictable rules. And that's where the challenge comes. As I mentioned, we work on a decentralized basis, which means we rely on our country offices. And through those country offices over decades, we have very strong relationship with all IFC stakeholders, including governments, including regulators. And through our projects, either it's direct investment, either it's through mobilization, either it's through advisory or public-private partnerships, we always try to close this gap. Lastly, I would just like to highlight that the World Bank Group in general is collaborating with the CEOs of the biggest companies worldwide in something called Private Sector Investment Lab. And in this lab, they gather twice a year to address the barriers to emerging markets. The biggest barrier, or the top of the list of these barriers for this lab is actually regulatory uncertainty and how to come up with this regulatory framework that is outcome-based rather than politics-driven to some extent.
Okay. And Thomas, with industrial policy surging abroad, how does EDC ensure Canadian projects stay competitive?
Yeah, very interesting question. And we have kind of seen a development or really over the last kind of few weeks in terms of really a big focus on major products within Canada, in particular kind of expanding our LNG resources, getting shipped out of the West Coast, development of the Port of Churchill in terms of getting critical minerals and other grains and potash out to the European market as well. I think a few other people have talked about the new small modular nuclear reactor project that's being done in Darlington in terms of how that might help commercialization going forward in terms of a resource. So I think we are moving forward in the right steps. I think in particular, just as kind of Canada has faced some global trade headwinds with our biggest trading partner in the South. So I think we are seeing kind of this focus on major projects in terms of getting that infrastructure ready for helping Canadian companies kind of move forward, but still doing it in a sustainable way.
Okay. Andra, you mentioned the Amazonian Fund. And I'm wondering, how does the IFC can actually help the Amazonian, via the bonds? What would the bonds finance and how would that work?
The IAGB, yes.
Yeah.
So, well, basically, we are looking to finance projects that look into deforestation. That's one aspect of it, protecting biodiversification, and also supporting small farm holders and MSCs and MSMEs in the region. And I'll take into consideration the specific needs of the region and following in terms of the indigenous groups, respecting indigenous transitions. So that's one aspect. The other one is through productivity and innovation. This is a new project, so we are using part of the experience of the bank in similar sectors, and maybe not necessarily in the Amazonian region, but in other regions. We look into synergies as well between our organization, the IAGB, and the IGB Invest, which lends specifically to the private sector, as well as the IGB Lab, which is also part of the IGB group, but they are looking mostly in technical cooperations and work primarily with donors and grants. So we look into synergies between the three organizations to make certain we are addressing the specific needs for that for the peoples in that region. And again, it's a new initiative, relatively new. We are weighing with experience that we gain. The bank is a knowledge base as well, and we very much like the cross-pollination aspect of the bank, and that's how we are looking to move forward with projects in that region.
Thank you. Now, Samir, actually from IFC, you mentioned about perceived risk. So how do you address the perception that emerging market risk is mispriced?
Yeah, that's a very good question, actually, and I think it's very important to ask ourselves this question. I think the first factor in determining whether something or an asset class is mispriced is actually the number of investors participating and the amount of trading happening. And that's what IFC and pretty much all the MDBs is trying to do, which is to not only invest from their accounts, but also to mobilize capital. And that's how we increase the number of investors participating in developing countries. The second part is the data. You need to have data to analyze the fundamentals of the asset classes. And there is a very, very good initiative that's done as a result of calibration of all DFIs and development partners, which is called the Global Emerging Market Risk Database. Mm-hmm. And this database analyzes the credit performance of developing countries over 30 years. And the results is very interesting, very, very interesting, in my opinion, because the average default rate in emerging markets right now is 3.6%. And the average recovery rate is around 72%. That's actually very high to the perceived risk that we have. The other important observation is that using the implied default risk from CDS spread of sovereign countries is not the right way to assess and price assets of private sector, because private sector does have a different behavior when it comes to paying back debt. So using that implied risk from the sovereign states is actually kind of overstating risk and unnecessarily increasing the premium. So I hope that these databases will be used in evaluation and pricing of investments of developing countries across the globe. IFC also recently issued the Emerging Market Securitization Program, which is a CLO-like structure where you have a standardized exposure, or investors have a standardized exposure to different to different loan portfolios with different exposures to certain industries and some limits. And then there is a tranching happening where the first tranche is AAA rated, the second tranche is mezzanine, and then the last tranche is equity based. And we use the data from this database to price those, this structure. And we hope to see more of it in the future.
Where are Canadian institutions uniquely positioned to lead in sustainable finance, and where are they lagging?
Yeah, I guess in terms of where we're really performing right now is in terms of our resource sector and the necessary resources that are needed to kind of help green the world economy. You know, point to things like uranium and critical minerals that we're looking to expand. So obviously there is that environmental hit when you're first doing the mining, but then the rewards come later on when you're not needing to have that same continuous way of doing it. In terms of where we could probably look to start doing a bit better, it's probably on our transition story in terms of how we're starting to move from some of these hard abate sectors to start reducing the emissions. And I think that's quite a long process. Kind of within EDC and our sustainable finance framework, like we do offer transition financing. But the one thing we've seen is there hasn't really been that pickup in demand for it yet. Like as much as we can offer the loans, we need someone to want the loans. So I do hope that like eventually that starts becoming more of a thing and we start seeing more demand for those products in terms of transitioning. And I think we're encouraged by, yeah, there's still being strong demand for, you know, ESG type labeled bonds.
André, 10 years from now, will development banks still anchor global capital mobilization, or will new players take that role, in your opinion?
Well, we always welcome new players, so there is a lot to be done in our region in terms of financing and ESG financing. And on our side, we are focused on the economic development, social and financial economic development of the countries in the region. And there is many opportunities there in terms of some of the topics my colleagues already mentioned. Keep in mind that we at IAGB, we finance a bit different because we finance countries and sovereign guarantee loans. We don't finance directly into the private sector. But in that sense, we do finance projects that would encourage the initiatives from the local government in terms of especially productivity and innovation, as I had mentioned, but also rule of law and infrastructure. It's interesting that Thomas mentioned transition finance. It's another opportunity there as well. We have products already in terms of green energy and renewable energy, as well as climate change, especially disaster recovery initiatives as well. So if, for instance, one of the projects, when is contingency loans in case there is a hurricane or earthquake, the bank is to some extent counter-cyclical, so that we are there to support our countries in those situations.
What do you think, Samir?
It is, I mean, in general, I would say that, you know, closing the gaps is very important, but also addressing different topics that causes divergence between private sector and between DFIs is also very important. So topics like investment horizon should be closed, like investors normally expect in developing countries longer time horizon in terms of investment. And usually it's not easy in developing countries, so it needs to be more and more specific. And this is something that we've been working with investors. Also, I would say one of the things that we also talk to investors about is the amount of, is the difficulty of reporting the data, meaning that for our social team, for example, we can report the data, but how the new job, we can talk about job creation, but what are the quality of the job being created? So we always invite investors to be part of that and to give them the complete picture about how we view our added value locally.
Okay. We only have a few minutes left, but I'd like to hear from you, Thomas. Do you think what happens 10 years from now?
Well, 10 years from now, I hope global trade continues to grow. I hope that we move along this path in terms of transition and addressing some of the environmental concerns that we have globally. I think Canada is in a good position to kind of help with that transition as well. Like, we have the critical minerals, we have the resources, we have the knowledge to really kind of drive this going forward. And we are seeing demand for our products as we go along here. So yeah, I hope continued trade and continue to working with people like IFC and IDB as we kind of move into new markets and kind of sharing knowledge amongst ourselves. Okay.
Okay. Thank you for having us, and thank you for giving your very valuable insights.